All right. Well, we're going to do a couple Lutz intros today before we hand it over to Dave McGuire and McGuire Sponsel. I'm Clark Beller, audit shareholder here at Lutz and run our construction practice. So the presentation today is very reflective of a lot of things that you guys are probably hearing.
Yep, and I'm Joe Donovan. I'm in our tax practice and work with some distributors and manufacturers that this also, might be applicable to.
Absolutely. But we're really excited to have Dave McGuire here today. Like I said, from McGuire Sponsel. They've been a great partner with Lutz over the last 15 to 20 years. We do a lot with them on cost saves and R&D studies and things of that nature. They're a member of several organizations that we're a member of as well. So their competency is second to none on these specialty tax and specialty consulting items. But really what we're after today is to describe a lot of what you've been hearing in the news, which is, okay, we had tariffs roll out in 25, ruled unconstitutional in 26. Now, how do we get our money back if applicable to our business? So other than that, we're going to hand it over to Dave and let him kind of go through some things. I think the slides shouldn't take too long, and then we'll open it up to questions and see what questions come out of this.
Do we need to do a check, make sure we can hear us? I don't know if there's a way, Ellie. We're good. Okay, sounds like we're good to go. So Dave, we'll turn it over to you.
Okay. And if people have questions that they want to mark down, feel free to put them in the webinar chat, which should be on your Zoom profile. So I think you can do that. If you can't, that's okay. We'll get them at the end of the day.
We're confirming you can. You can for sure. So
okay. So today what we want to talk about is obviously this tariff, and we'll talk about specifically what tariffs, because it's not all of them. You might be paying a tariff today, and just because you're paying a tariff today does not mean you're getting a refund. Just because you paid a tariff this time last year doesn't mean you're getting a refund. And we're going to walk through what that means, how you go through it. So we get started. Just real briefly, I don't need to have my picture up there. Real briefly, I'm Dave McGuire. I'll have a slide at the end that has my contact information, so I don't need to have the big one. That was a really big picture of my head. And what's interesting, whenever you see me present, depending on the age of the slides, you can tell how old the slides are by how much hair I have. So, and it's been very rapid over the last 5 years or so. So I don't like to see them because it reminds me that I had hair. So about McGuire Sponsel, it was kind of briefly mentioned. We're a specialty firm. We work with about 500 CPA firms, such as Lutz, around the country. On a lot of these specialty tax areas, I'm not going into those right now because, well, that's not what we're here for. And so what do we want to talk about today? So we want to talk about what this is, because there's, like I said, there's a lot of kind of information out there, but there's a lot of bad information. There's a lot of confusion. There's a lot of where do we go from here? What are the next steps? Is this still going to be around in 6 months? There's obviously been pushback at the federal level and questions as to whether or not the administration is going to fight some of the refunds on these. So we want to talk today about, number one, do you qualify? And then where we are in the process, because where can you get cash quickly from these refunds and where can you not? And then we'll talk about timing and next steps as we go through. So obviously certain businesses are going to see this. So it is primarily for companies where you imported between February of 25 and February of 26 is the only time that the actual refund is going to qualify. Now, it is critical that you are the importer of record, and we'll get into that a little bit more, what that means. And so really anybody that's importing a lot, that could be manufacturing, building materials, distribution. We see it in medical devices, industrial equipment, retail, but not everywhere. So for example, steel and aluminum tariffs are covered by something else, so they're not covered by part of the IEEPA. But however, wood, maybe. There are other areas. Now, it's not always big things either. So people always say, okay, what's an importer of record? Well, I always like to use the example about 5 years ago, before these tariffs hit. my wife was watching a lot of things on the internet and decided that epoxy river tables were all the rage in home decorating. So if you haven't watched them, it's where you've got a nice natural edge and there's an epoxy pour in the middle, so it breaks up the natural wood with something that looks a lot more finished. And she looked around locally and realized that they were going to cost $20,000 to $30,000. And I said, I'm not paying $20,000 to $30,000 for a dining room table. I don't make that much money. And so what she did is she went online and found somebody in Turkey that could make this table. And it was about a third of the price that it would cost in the US. So she went to this place in Turkey, found somebody in Turkey. They built the table, imported it. I had to actually work through and pay the tariffs and become the importer of record in order to do it. Had that table been imported during the IEEPA regime, I would have been subject to these tariffs to import that table at that point in time. So even though it's just one table that I imported for my own personal use, I actually would have been considered the importer of record. I would have had the ability to go in and actually claim a refund. So when we're talking about that, we're specifically talking about the International Economic Emergency Powers Act. So this is where it could be reciprocal tariffs, fentanyl tariffs, Russian oil tariffs, Brazil tariffs, trade deals negotiated under IEPA, et cetera. So the best way to think about this is I'm sure we all remember, I think President called it Liberation Day and came out with the chart that you actually see and said, okay, here's the tariffs we're putting on people. Now that was done, I believe that was actually in March or April of 25, but there were some places that had already had tariffs put on them before then. That's why we can go back to February. And so you can see it's a lot of countries were subject to these on one level or another. Now, we didn't stick with these tariffs, they jumped around. And so we'll see different tariffs depending on the time of year. But this is all we're talking about. So if Congress had already negotiated a tariff or come up with something else, that does not qualify for this refund. These are only the ones that were used under this regime. So we talk of first bullet point is reciprocal tariffs. That's what actually we were talking about under this, the Liberation Day. And so it's very, very specific. So what happened? So if we look at the timing of this, so back in starting in February, these tariffs started to be imposed. And obviously businesses were subject to them. And sometimes it was very difficult on the business. And so there were a lot of court challenges. So it was in February of 2026, the Supreme Court said, you know what? You cannot charge these tariffs under the IEEPA. The IEEPA does not give the president authority to give these tariffs at this level. And that was a 6-3 decision, I believe, on the Supreme Court. Now, that didn't automatically create refund opportunities. There was still a question. It was a lower level court that then decided that refunds had to be paid out. And we started paying out refunds. Now what's happening is people are evaluating claims and they're filing for it through their ACE account. Now, what I will point out is if you're reading the news lately, the administration has said that they are appealing the ruling. The ruling they're appealing is whether or not they have to pay back these to people that have not sued them. It's not whether or not they have to pay them. It's not whether or not they could have taken them. It's not whether or not people deserve the money back. It's whether or not if you didn't sue me directly or ask for these back, whether I have to pay them out. So that's one of the questions that comes up. If I've been paid these and this lawsuit continues or they appeal the administration, will I have to pay them back? No, you won't, because that's not the portion that they're appealing. They're just appealing whether or not they have to actually provide this methodology for you to go after them. So if you get your tariffs, you get them refunded, you should be perfectly fine. So this was done through the CAPE system. So right now, they have opened up the first phase of the CAPE system. So under phase 1, we are looking at whether or not, basically, it's only covering tariffs that have been liquidated or within the preceding 80 days or not liquidated when processing began. So what we mean by that is not everything currently qualifies. Sorry, I'm making sure I'm looking at something else while I'm on the screen just to make, because there was a note that came across, but it's not related to this. So this is entries liquidated within the preceding 80 days. Now, in theory, it is currently the 22nd. So in theory, phase 2 is supposed to open on the 29th, which will include entity that is unliquidated or liquidated within 80 days of phase 2 filing date, and where the reconciliation entry has not yet been filed. And then phase 3 will cover finally liquidated entities and will be processed for importers who have filed lawsuits within the Court of International Trade. So when we're talking about liquidated versus unliquidated, we're specifically talking about whether or not they've processed that payment yet. So for most people, the majority of those, that phase 1 and phase 2 covers the majority of tariffs paid. I think I read somewhere it's about 80% will be covered by phase 1, probably another 15% or so by phase 2, and we're really only talking about a small slim that's in that phase 3. So for most people, you are good with the phase 1 and the phase 2. So once you have that, we have to look at where you go. So what are some of the questions? So this is where I mentioned before, what's eligible for refund? So we're only talking about tariffs under the International Emergency Economic Powers Act. So once again, I mentioned this earlier, that steel tariffs, they don't qualify. If you remember, under the first Trump administration, they put on tariffs on washing machines. Those tariffs on washing machines were held up and went through, and the Biden administration didn't change it. Those are still there. That still exists. So number one, the first step is, are the tariffs that I paid eligible? And if you were just importing steel or aluminum, you might be subject to other tariffs, so you might not be able to. But if you're importing a finished good, you probably paid something. Then we have to figure out, okay, I paid something. Am I the one who's eligible to get repaid? So in order to get repaid, you have to be the importer of record, and it cannot be transferred. So what that means is, let's say I bought a TV from Target. Target bought the TV from Sony. Sony's the one that imported the TV to the US. In that case, Sony is the importer of record. Now, Target could go back to Sony and say, look, I want a discount because you got money, but they can't transfer that tariff refund to them. Sony would be the one to need to apply to it. Now, whether or not it ever comes back to me that bought the TV from Target, that's a longer question and probably not relevant to this call, but there's a question mark there. So let's say I'm a builder and I bought a whole bunch of wood from Home Depot, and the cost of my lumber products went way up during this regime. Home Depot, if they are the ones that imported the wood, potentially can get a tariff refund. Whether or not I ever see a discount on that is another question. And then when I get further removed from it, it gets actually further and further. How quickly will claims be processed? Right now, the government is saying 60 to 90 days from when you file, you will see your refunds if you are eligible for the refund at that point in time. We are seeing that being much quicker than that. We are seeing refunds as quickly as a week or two. What about future tariffs? We don't know, is the short answer. So after the IEEPA tariffs were ruled illegal, the administration went and put a global fixed tariff, I believe it was 10%. Don't quote me on that. I've been spending a lot more time dealing with the IEEPA. That was quickly appealed by multiple people and questioned whether or not, and there have been some court cases but they were extremely limited in their scope to stop that. So as of today, right now, any tariffs outside of the IEEPA are not qualifying. So then how do we determine eligibility? Well, the first thing is start looking at the forms you filed. Do you have a 7501 where you've brought in tariffs? Do you have an ACE account? We can quickly start getting our arms around how much you might be eligible by gathering some basic information. So if you imported a lot of volume of assets between that February 2025 through February 2026, there's probably something there if you were the importer of record. Now, if you weren't the importer of record, you might be subject to some other areas. So what we want to ask ourselves is, did we import it to the US? Did we pay these tariffs? And then how much was paid? Now, how much was paid is probably a big deal, because if I'm sitting there, I'll go back to my table example. I import one table for $10,000. Say that's subject to a 20% tariff. That's $2,000. How much effort am I going to go through to get that $2,000 back? But if I have $100,000, now I'm talking about on a 20% tariff. Now I'm talking about $20,000. That's worth a lot more. If I take it to 100 million on 20%, that's 20 million. And these numbers seem ridiculous, but actually, my colleague just got off the phone with somebody that is due probably $10 to $50 million worth of tariffs that have been paid, and they have not filed for it yet. Now, what's happened is, and then we get to, has anyone reviewed refund eligibility? Now, what we've seen is that some people have brokerages or other things that are helping with them, but not everybody. We've also seen a lot of brokerages that have sent people an email and said, here's the steps to go through it, but it's all on you. Now, what I would say is, if we go back to that timing and the question on whether or not it's appealed, if the administration decides to shut this down, they could shut down the process tomorrow while they wait for these appeals to go through. The courts may disagree with them, but they have the ability to do that. So I wouldn't sit on it in these situations. I would move forward as quickly as possible if you think you're sitting on money, because you don't know when this could stop. Now, the hard question. What do I do with it once I get it? So let's go back to the example of somebody that imports wood and supplies it to someone. Do I need to refund the person that bought lumber from me? The short answer is maybe. It probably requires looking at the contracts I have. Did I charge the tariff separately? Do I have a cost plus contract? How was that set up? Now, it's one thing if I'm a lumber installer. It's another thing if I'm actually buying a custom piece of equipment and installing it as a builder on a building. Well, then maybe I'm on a cost plus contract where if my cost drops, I might actually have an obligation to pay them. There's also business considerations. Talked to a client the other day that is importing a little widget, and that widget, it's a plumbing piece. That plumbing piece is being sent to a national distributor. Won't say who, but you can think through who sells the most plumbing parts. It probably gives you a general idea. That person reached out to them and said, look, we want our money back from the tariff refunds. So there's a question mark there. They don't have a legal obligation, but they also know that their largest client is asking for some of it. So there's probably a situation there where there's a business consideration. Do they go after it? Now, let's say I'm not the one getting the refunds. Then I might want to review contracts, and I might want to reach out to somebody, because in this case of the plumbing company that's making the plumbing parts, they're not paying it out unless they have a client that's a squeaky wheel. Squeaky wheel sometimes gets the grease. So they're going to be asking for it, and then they might not pay out the full thing. They might come to an agreement because they might not know. I've got 10 SKUs coming, or I've got a SKU coming across of a specific part. I might have 10 different imports throughout the year of that. I'm not necessarily tracking that to a specific person.
I think we got a question.
Yeah.
We can do them for
So
the
if I'm not the importer of record, Do I need to wait for the importer of record to receive a refund and hope they stay true to their word and pass it down? That depends on who it is, but in this case, it's FedEx. If FedEx is claiming it, yeah, you're going to have to wait for FedEx to pay it out unless you have a different agreement with FedEx. And right now, if you don't have a legal agreement with them, you're almost taking your word at it. Now, I think FedEx isn't going to want the press of not paying that out. So if FedEx is the one doing it, you're probably pretty comfortable that they're going to be able to pass that on to you. But it is something to monitor and follow up with them on, especially depending on the volume of it, because it's not something they have a legal obligation to do. They're doing that for goodwill more than anything else. So I would keep pushing it off to them. Now, we're on a call, and some people go, okay, why do we, as McGuire Sponsel, work with firms like Lutz? Well, anything we do has an implication on the rest of your business. So if I have refunds coming in, it's going to have an effect on my tax filing next year, whether that's on my cost of goods sold. So maybe, and it may even have an effect on my return from last year, because it could affect my cost of goods sold. So if I imported $100,000 of items, I paid a 30% tariff. Now my 100,000 is 130. I sell that for 150. Obviously, that had a tax implication. Well, now I get $30,000 back. So that's going to affect my cost of goods sold or something else. Now, let's say I didn't sell it. I bought a piece of equipment. I bought $1 million piece of equipment to put on my manufacturing floor. That was subject to a 30% tariff. Now I paid $1.3 million for it. You capitalize that piece of equipment. Maybe I took bonus depreciation or 179 on it. So now I have my depreciation numbers, or my 179 numbers are way too high. Maybe I need to go back. Do I need to amend that return? Do I need to file a change in accounting method? How do I adjust that basis to get back down? Obviously, there's financial reporting impacts, cash flow planning, everything else. This is not something that's just, hey, I got a check in the mail. I can go buy a boat now. Be nice. If you buy a boat, let me know. I'll go for a ride on it. But it is something that we need to watch out for, is making sure that everybody's aware and what are the long-term impacts. Because take basis impacts. If I use that example on the basis impact, I bought a piece of equipment for $1 million, and let's say I have 1.3 million once I have the tariffs. Well, I took depreciation on it. I'm at a 30% tax rate. Let's make it 30% just to make the math easy. So basically my depreciation was 1.3 million, 30%. That saved me $390,000 on depreciation. Now, without the extra 300,000, my depreciation number would have been only 300,000. So that's a 30% tax rate. That's a $90,000 swing. So really the impact of my $300,000 check may be 210. But the same thing goes into play when I look at my cost of goods sold, because did I charge extra for it? How did that go through? So there's a lot of potential tax impacts of this as we go through. And it's not just there's a check in the mail. And it may be that it increases your income next year. Maybe that you have to go back. It really depends on your accounting methods, everything else. Like I said, the timing is going to be critical, and understanding where I stand with my unliquidated, my recently liquidated, my finally liquidated accounts is going to be critical. Like I said, phase 2, so the new one is going to be opening soon and everything else. So, but this was all appealed. So we could see this stop processing. I see a question, what about phase 2 and phase 3? Same thing's going to hold true. If we go back, before I go through this, if we go back to this slide that goes through the phase 2. So the same things that hold true with phase 1 are going to hold with phase 2 and phase 3. And if you started the process with somebody on phase 1, you're probably good on phase 2. Phase 3 is going to be a little bit different. And that's really probably somewhere where you're going to have to determine whether or not it's relevant or not. For most people, phase 3 is going to have less relevancy, and it really depends on the dollar amount. Because one of the things that we have to look at when we're going through these is if I have to have, let's say I've got, let's just make it easy on us. Let's just say in phase 1, I've got $100,000. It's affected to phase 1. Like I said, most of people are getting paid out on phase 1. and I find somebody that's willing to help me, it's not that expensive, I get my $100,000 back. Phase two, I still have $20,000 sitting out there. With phase two, I'm able to get 15,000 of that. Once again, that's probably relatively easy, and there's not a lot of work there. So I can get that done. So now I've got 115,000. For phase three, I've still got 5,000 sitting out there. But let's say that 5,000 is going to cost me $4,000 to recover. I may decide at that point not to go forward, but if I'm sitting out there with 50,000 that's still under phase three, it's probably going to be worth it for me to start exploring it. As we go through the phases, the cost of it to actually go through the process is going to get a little bit harder. So really the next step is to start looking and moving forward. So really, the main thing that we want to leave people with right now is that if you paid IEEPA tariffs, or if you paid tariffs at all, have a phone call with somebody. Pick up the phone and call myself, anybody, and actually let's start walking through. Let's look at your ACE account. Let's look at your import forms and actually make a determination as to whether or not this is something that you should start exploring. Worst case scenario, and we have had these calls with people, we look at it and go, yeah, there's nothing there. Maybe it's a tariff that's not being refunded, or maybe it's that you're not the importer of record and you thought you were. But we've actually, over the last couple months, I've seen more people that were the importer of record that thought they weren't than people that were not and thought they were, if that makes sense. So more people are eligible for this than believed to be. Now, I will also say, this is irrelevant of whether you think the tariffs are a good idea or a bad idea. So if I agree with the tariffs or if I disagree with the tariffs, that's irrelevant, because if the monies are being repaid and my competitor is getting money in their back pocket, and whether they're refunding them to their clients or using them as a war chest, they now have an ability over me that I don't have if I don't go after it. So it's critical that you don't just let this slide, even if it's a small amount, even if it's $50,000. $50,000 is still a significant amount of money for most businesses, and it's worth going after. Now, so we'll open it up for any more questions that come through. Putting my contact information up there. Obviously, we work with Lutz. If you have a question, anybody at Lutz can help you with this, and they'll get me involved. But I also put my cell phone number up there on the screen. That's not an office line. It's not one I can hide from. It's not one. If you call me, it's this phone that rings even when I'm making dinner for my kids or my wife. This is the phone that's ringing. So I will answer it, and you can test me out. If there's a question you have, don't hesitate to reach out. Don't hesitate to ask me a question or anything else. And we're more than happy to answer it. And as I said, put the picture back up there so you can see, like I said, the progression of hair loss. There was some hair in that picture, even though it wasn't much, and there's definitely none on the little screen you can see. So, and it's worse if we take a picture from about 4 years prior, because I was also about 50 pounds lighter. So I've got the weight and the hair now, but we'll just let it slide. So.
Any questions, feel free to, throw them in the chat here and we can get them answered. But I think, kind of echoing both Dave's and Clark's comments at the beginning of this call, Lutz has been partnering with McGuire Sponsel. Gosh, I think the whole time I've been at Lutz. We work with them on a lot of specialty tax matters, stuff where we don't have the expertise or the engineers to really do the good work that they do. And they take excellent care of our mutual clients. And are just awesome to work with in these kind of more nuanced situations. So for sure, to Dave's point, reach out to someone, your Lutz representative, reach out to Dave. We just want to make sure if there's an opportunity here that we're addressing it. And our goal today was really just to try and educate our client base where it's applicable, because this is kind of coming hot and heavy. And probably, a couple of weeks ago, Clark and I were kind of sitting together and had seen a piece that Dave had published and said, okay, we need to try and get this out to our client base to make sure that there's an awareness there and that we're not leaving money on the table if there's an opportunity.
Yeah, and I think to Dave's point about the squeaky wheel, right? Even if you aren't the importer of record, I think what comes out of today's call is you have to have a discussion with whoever imported that specialty piece of equipment that you purchased, whoever imported that specialty construction product that you imported, because there's likely the ability to ask them if there's anything they can do for you to make it right. There's a lot to think about here, but I think it'd be silly not to spend a couple of hours doing some homework locally, and then reaching out on any questions.
And I think the one other thing that I would always emphasize more than anything else is if you get, especially if it's a significant dollar amount, make sure you're talking to Lutz or whoever your tax professional is. Let them know it's coming, because it could affect a lot of tax planning and other types of conversations. So if it's one thing if you're talking a couple $1,000s, but if we start talking in the tens of thousands or hundreds of thousands or even millions of dollars, that's going to have an effect. And it's the sooner that Lutz or whoever works with you on your taxes knows about it, the better off you are to plan for it and make sure it has less of an impact on your tax filing moving forward.
No, well, we sure appreciate Dave's expertise in this area. Like I said, it was a blog post that he sent out that kind of got us, aligned on this, and glad that we could, because definitely need an expert involved when we're talking through this stuff. So,
well, I appreciate everyone's time today. If there are any questions, like we said, we tried to keep it short so people could get back to their busy schedules. But if anybody does have any questions, feel free to reach out anytime. Call me on my cell phone, test if I know what I'm talking about, even if it's when you're driving home from work today at 6 o'clock at night. Call me and say, hey, I saw you do a presentation. I want to actually test you when you're not prepared for it. So,
and lastly, we will be sending out a recording of this. So if you're in the seat that maybe this isn't applicable to, we'll have it posted so you can pass it on to the rest of your organization, and maybe they're more suited to contact us or Dave.
All right.
Awesome.
Well, everyone have a wonderful day, and I appreciate everyone's time.
Thanks, Dave.
Yeah, thank you, Dave.